Hey everyone, and welcome back to the Finance Zone. As we get ready to turn the corner in February, traders are constantly looking for the best penny stocks to buy. Learning how to day trade penny stocks has skyrocketed in popularity over the years as more and more people gain interest. But what are penny stocks, and why are they so popular? For some context, the term penny stock means any security that is trading under $5. Given that there are so many to choose from, traders have to be picky when creating a strong watch list. One of the reasons that investors love penny stocks so much is the heightened potential for large gains. For example, if a penny stock goes from 10 cents to 20 cents in a day, that represents a 100% gain. If a $10 stock adds 10 cents in a day, that's a 1% gain. With penny stocks, it's also common to see large double-digit gains during daily trading sessions due to how high volatility is. It's worth noting that the potential for losses is also just as great with these securities. Okay, so now that that's out of the way, it comes down to knowing exactly where to look to find potential winners. With this, investors should utilize the same trading methods such as research in order to compile a list of penny stocks to watch. Today, we're going to be talking about best penny stocks to buy this week. Make sure to stay till the end to learn about these amazing penny stocks. Zosano Pharma Corp. Biotech penny stocks have been some of the hottest in the stock market today. Known for cutting-edge advancements in life sciences, these companies can be the epitome of risk and reward. One of the main reasons is that during the trial stages, companies either make big leaps forward or fall flat. This can make for a volatile series of headline-fueled catalysts. Zosano has shown both sides of this coin. Since the beginning of the year, ZSAN stock is up more than 100%. But since reaching 52-week highs earlier this week, ZSAN is actually down over 40%. So let's look at the catalysts behind both moves, up and down. At a higher-level overview of the company, ZSAN shares rallied as the company continued reaching new milestones in its Qtrypta microneedle system development. Zosano requested a Type A meeting with the FDA relating to its resubmission of a new drug application. About a month after the news, the company learned the requirements for resubmission and set forth an action plan. Ultimately, an additional pharmacokinetic study will be necessary for resubmission. As far as the pullback from earlier this week, this may have been due to just profit-taking. In general, a pullback like that tends to have some kind of news or filing associated. However, neither one has come up so far. Needless to say, it looks like ZSAN has started turning heads on Friday once again. Trivago. Hotel booking site Trivago has been in and out of the spotlight as virus cases numbers have increased and decreased. However, with stimulus on the horizon and vaccines in circulation, the travel industry has gotten a booster shot of its own. TRVG stock has climbed for the last few months as speculative momentum built in travel and reopening stocks. This week, analysts from Morgan Stanley weighed in on the company. Is it a signal to the broader hospitality industry? That is something we'll have to watch closely. However, Morgan Stanley kept its equal weight rating on TRVG, but increased its price target on the stock to $2.40. This came just one day after Susquehanna analysts raised their target from $1.25 to $3 on the penny stock. In Trivago's recently filed earnings report, the company posted lower year-over-year sales and posted a loss for the quarter. However, Trivago CFO Matthias Tillman said in an interview with Barron's that the second half of the year could see a major return of activity. We have seen it last year in Europe. When the weather gets better, numbers tend to be lower. In Germany, the government announced last week that with the current plan, everybody will be vaccinated by the end of September, he said. So that means going into July, a vast majority should be vaccinated. This has brought a bit more upbeat sentiment in the stock, in addition to recently target increases by analysts this week. Torchlight Energy Resources Inc. Torchlight Energy has become somewhat of a turnaround story in recent months. The traditional oil and gas company has made a drastic change. This includes entering into a merger deal with Metamaterial Inc. This deal would effectively turn Torchlight into a company that focuses on clean technologies, including solar energy. We believe this transaction provides our shareholders with the best opportunity moving forward. Metamaterial offers proven disruptive technology with strong environmental, social, and governance priorities, is what John Berta, CEO of Torchlight, said at the time of the initial reveal of this combination. This week, Torchlight announced a $5 million raise where net proceeds are to provide additional bridge financing to Metamaterial Inc. This is in connection with the arrangement agreement between the two companies. Though the raise was done at a discount, $1.20 per share, the market continues to react favorably. Atif Holdings. Shares of Atif Holdings continue to rise, though volatile, to new heights this week. If you look at the bigger picture of this chart, there is a clear uptrend. But on a day-to-day basis, Atif stock generally sees an intraday swing of 10% or more at times. Furthermore, if you're looking at different technical setups, Atif stock has finally made it back to a level that shares gapped down from back in November. A gap fill is usually seen as a sign of strength and has come after a series of catalysts help propel shares. The company provides businesses and financial consulting services in Asia and North America. In a recent letter to shareholders, CEO Faishan Shi discussed several key updates for the market to focus on. Some of the more notable include $7.8 million in consulting service agreements from February to November were signed with companies anticipating their entry into the U.S. capital markets. The company also relocated its headquarters to California and launched a new asset management business model. This has become the main focus of Atif. And this month, the company completed the filing of its private Atif-1 fund. While this could be one of the hot penny stocks to watch, it's worth recognizing the increased volatility levels in the market. So if it's on your list, keep that in mind as share prices can fluctuate 10% or more on any given day. Globalstar Inc. Another one of the companies gaining a lot of attention this year is Globalstar Inc. The company focuses specifically on the Internet of Things, IoT. This can be anything from communications, i.e. 5G, to data management and applications. The initial spark for its bigger 2021 move came after Globalstar announced that its partner, none other than Nokia, entered into an agreement to deploy Globalstar's Band 52 spectrum at the Port of Seattle, Terminal 5. This was the second deployment between the two companies at a U.S. port. Moving forward, Globalstar continued reaching new milestone deals with the likes of Ceres Tag and BattleBox via its Spot LLC company. The company's Band N53 was included in Qualcomm's new 5G X65 modem. Similar to TRCH, GSAT stock popped this month and came back down swiftly from new 52-week highs. There weren't any negative headlines to suggest a mass exodus from the stock. However, it may have been another instance of profit-taking. Friday, GSAT stock has continued reversing its trend and may be a trend to monitor. Fixus Tankers Inc. As its name suggests, Fixus Tankers works in the maritime transportation industry. The company has a firm focus on the U.S., providing transportation services for an extensive range of products. This includes gasoline, diesel, bulk items, organic chemicals, and more. While shipping definitely declined early in the pandemic, the demand for these services has steadily increased in the past few months. Because PXS stock tends to shift in correlation with the energy industry, it has seen more bullish interest in 2021 than usual. Fixus operates 5 double-hull product tankers. In its financial report released in November of 2020, Valentinos Valentes, CEO of Fixus, made a statement regarding the company. The chartering environment for product tankers in the third quarter of 2020 continued to be very challenging, reflecting the normal seasonal softness, which was further compounded by the negative impact of COVID-19 on demand for refined petroleum products. In November, we typically start to experience a seasonal boost in demand due to the movement of home heating oil cargoes and weather delays. This sentiment seemed to illustrate that demand for its services is cloudy in the near term. However, the energy sector is expected to grow slowly as virus cases decline. Because of its relationship to energy, traders should keep an eye on oil and gas demand moving forward. Jianpu Technology Inc. Another tech penny stock of interest is Jianpu Technology Inc. The company provides an online discovery and recommendation platform for use in the financial services industry in China. Its products allow users to gain insight into a broad range of consumer financial needs. This includes credit card applications, wealth management products, and loans, among others. Also, the company provides marketing and sales data to its customers. While Jianpu doesn't put out that much information regularly, let's take a look at some announcements from the past few months. Last month, the company received an extension from the New York Stock Exchange regarding the delayed filing of its Form 20-F. The company has been working with the New York Stock Exchange to get this data in as quickly as possible. Now it has until July of this year to complete it. At $4.46 per share as of Friday, February 12th, Jianpu looks like it is attempting moving out of the penny stock territory. And with wealth in China growing substantially over the past decade, financial services like the ones Jianpu offer are seeing increased demand. We do have to consider the past and continued effects of the pandemic on the worldwide economy, but China looks like it has managed to get its case numbers under control. Whether or not and how this affects JT stock remains to be seen in the short term. Something that may be of interest, however, is a filing last week. In an amended 13G, Morgan Stanley showed an 8.4% stake in JT stock. Will institutional interest remain a driving force behind JT's recent surge of momentum? Thanks for watching. While you're here, go ahead and click on one of these 2 videos on your screen. And don't forget to like, subscribe, and comment below. See you there, and thank you for watching.